Hey guys, welcome back. In today's video, we are talking about how we have won the battle, the insane market cap, what comes next, and many more in this video. First, we're taking a look at this. Today, we wanted AMC above 250, vice versa. The shorts wanted AMC below 250. And the reason for this was because if you take a look at the option chain summary, you'll see that plenty of calls were in the money. We had a max payout 150, which we are well above. But the fact that we closed today with AMC closing at 283, up 6.39% for the day, you can see how strong we are currently. So we have closed above the 250 as well, which is something that we set out as a target at the beginning of this week, and we blew past that. We went to the high of 290 today, and we've seen this in the past before. We saw when AMC went to the high of 194 when we were reaching for $2 target, and then we were then met with some pullback, but you saw how the price instantly pushed past. So now we're very likely to be looking at something very, very similar, because we talked about how powerful AMC already is, talking about the gamma exposure there is for AMC, closing above 150, closing above $2, closing above 250, all of these calls that have gone deep in the money. We now obviously aim for that $3. And so the shorts will try their best, just like they tried to prevent us from going to under 250 today, to obviously prevent us from going $3. So we are going to be met with a lot of resistance, but AMC is of course winning. What you will see, what we have to understand is that with the fact that AMC closed at 283, the fact that we closed above 250, we have put hundreds of thousands of call options in the money, and we're building an extreme massive gamma exposure. And this is very important because this ultimately leads to the pressure that can be applied. Remember, we talked about for if the options were to be exercised, especially the fact that we are now currently above 250. We talk about how all of these deep in the money options are some of the earlier ones, wherever it's 150, wherever it's $2, these are the ones that are going to be likely to be exercised. And so all of these right now are encouraging investors to actually apply even more pressure towards AMC. And just like what we've seen with the 150 with the $2, you can imagine what will happen for the 250 calls, for the $3 calls, when we see AMC go to 350, go to $4. And this is what we talked about with the snowball effect that we are having. So the very fact that we did close above 250 and the fact that we are very close to $3, it definitely is showing how apes have won the battle. And one of the things that we have to note is that right now we are seeing how they're trying to short AMC heavily. We already knew this, but you can see this actually from the shares availability. Now, what's interesting is the fact we saw it go from 10 million all the way down to 0 before going back up to 10 million again. Now, this is already showing that they are firstly trying to fill the market with as many shares as possible. So one of the things that we are seeing right now is that the demand is extremely high for AMC shares, and as it should be. We already know that people want AMC shares. We've seen from the FTDs as well why they wanted the AMC shares, and that's what we're looking at. Now, if these aren't some of the big players, what we talked about with companies that have bought in tens of millions of AMC shares, then what we are also seeing is how they have created another 10 million sets of shares, or potentially somewhere close to that. And this is essentially just adding on to that illiquidity problem that we're talking about, and ultimately talking about the margin requirements that's going to be forced on towards these shorts. Now, some other various means of how they were trying to manipulate AMC, you can see the decimal points being brought out again. We saw AMC go towards that fourth decimal point. You can see plus 0.0388. Now, we've seen this in the past before, and typically when you see it go towards in terms of these many amounts of decimal points, it's due to the fact that they are trying to actually apply AMC with the algorithms that have been used in the past, with the high frequency trading algorithms, to obviously manipulate the price. We've seen the spoofing, we've seen the high frequency, and this is what they're doing. And you can talk about how strong AMC currently is, and this is exactly why we've said the fact that apes have won the battle, because we were met today with the synthetics, we were met with the high frequency, yet AMC was still able to close above 6%. And so that's an extremely positive sign for what's going on, for what's to happen. And that's exactly what we want to see. And also for what we talked about with the gamma exposure, what we talked about with kind of the volume and excitement is that we suddenly get another 88,000 contracts in the money, meaning another 8.8 million shares to be hedged with purchases in the open market, assuming prices hold up. So if you want to talk about the pressure that we are applying, if you want to talk about the exposure that we have been mentioning, this is what we are looking at right now. And I think another big thing about this is that this has actually encouraged even more people to not only buy deep in the money call options, but actually you can see how the open interest has gone up for some of the far out the money options like the $3, what we talked about yesterday as well, for the $6 and for the $10 call options on AMC. Now, already this is showing signs of bullishness. This is the fact that people are realizing and knows where AMC is going to go, but also talking about how this is actually going to allow AMC to have the upward momentum towards these levels. And so when you see the pressure that these calls that are going to be bought because of the call options going in the money is going to have, you can imagine how people want to go to $6 and the same effects having that $6 to then push it towards $10 and of course higher. And more importantly, what we talked about with Adam Aaron and his potential hint of $75, you see how everything is starting to fit into place and how we're looking at AMC on that upward trajectory. And so remembering the feeling that in 2021, when AMC was hitting all-time highs, I think it will feel even better this time. And this is what the apes have been waiting for. This is exactly what we knew was going to happen. And we're obviously set to realize what's going to be happening for AMC and why we have been applying the pressure that we have. Now, a big thing about this is then the market cap. And during this time where, of course, people are realizing the opportunities, the potential, now what they're trying to say is the market cap issue. And you can see 30 billion market cap at the height of the squeeze 2021, which equals $50 in today's market, which would be MOAS. Now, I want to talk about this because firstly, we are not looking at the market cap as a ceiling because the Volkswagen market cap during its peak squeeze was crazy at the time. Now, I think it's very important to take it into perspective because first we have to realize is that when a squeeze happens, it's not going to be bounded by the fundamentals. We are going to be seeing a tons more cash that's going to be flowing into the market. What we have to also realize, even if we were to compare it to the Volkswagen market during its peak squeeze, we have to understand that the money in the stock market back then wasn't nearly as crazy as money that was in the market right now. During that time, there was no market, there was no stock that had $1 trillion market cap or even close to $1 trillion market cap. Nowadays, you're seeing multiple companies. We're seeing Nvidia going from 4 to 5 trillion. We saw SpaceX, which opened at 1.8 trillion and closing nearly at $3 trillion market cap. Not to mention all of these other companies that also have $1 trillion plus, like Micron recently. There is so much more money that's involved in the stock market right now. And I definitely don't think it's going to be bounded by this $30 billion market cap we've seen in the past. And especially when you talk about it in terms of a ratio to the Volkswagen squeeze back in the days, I definitely it's going to be a lot higher. And considering how much money that is in there and considering how some of these $1 trillion companies are used as assets for collaterals to short against AMC, you can imagine the money that will flow into AMC when it squeezes. And it's definitely something I do believe for the market cap to go higher. But not only that is we have to understand is that even if you were to compare it back to AMC back in 2021 of 30 billion, so many things has happened right now. The most important thing is that the company has reduced debt and improved drastically. Not to mention the billions of synthetics that have been created since then that's allowing AMC to propel. Remember, AMC was able to go to 30 billion on a very low amount of synthetics in comparison to what we are seeing right now. So if back then AMC was able to go to 30 billion without as nearly as much retail investors, nearly as much attention it will garner now, and the amount of synthetics that has been created, we can see and realize where AMC is going to go to. You can also see here AMC traded 68 million shares today. In other words, there were 68 million fake shares exchanged today. So this is just another example of how many synthetics are being created daily, how many synthetics have been created in the last few weeks, last few months, and more importantly, how many synthetics has been created since 2021. So when we talk about market cap, we definitely have to understand it isn't capped by the past because a lot of things have changed. We talk about how well AMC is right now. We talk about how many investors have bought into AMC. We talk about how many times the float has been created. You start to realize why that market cap is extremely low in comparison to where we are right now. And also a lot of things is that a lot of people are sleeping on AMC. When you take a look at the price action, when you see how well we're doing fundamentally, we are still extremely undervalued. And it's why I'm not surprised by the movement that we're seeing, because this is just a natural price discovery that we should be looking at when we throw away the squeeze aside. Just talking about how AMC should be behaving due to the current market, this is what we need to be looking at, and this is what we're seeing. But something to obviously look out for is that on June 3rd, last year, AMC share price was firmly moved and pinned to 333. Now, the reason why I mentioned this is because we're talking about how well AMC is doing right now. We talk about, firstly, fundamentally, AMC should be going up because we see how well the box office is doing. We see how well AMC is performing. But also, we talk about the psychological sentiments that's in AMC right now. But especially at times like this, we have to be wary of certain price levels that they are going to try and pin us at. They're going to try and manipulate us. Just like we talked about with the past example of AMC when it went close to that $2 area before the pullback. And we talked about how the same can be seen for $3. The same can be applied for what we talked about here at 333. So many suppression levels because AMC is a stock that has gone through countless amounts of manipulation. So we definitely have to be wary of everything that's ongoing. Now, the most important thing though is that what comes next for those that shorted AMC and GME will be biblical, because not one ape has sold, or at least the majority of haven't sold. 99% of the shares bought in 2021 is still very likely held by the apes. What we see with what GameStop is going to be doing, you're going to see how the short sellers are going to be in for a rude awakening. And another example of this you can see, so simulation, someone who we talk about on this channel a decent amount, you can see how he's talking about, I buy almost daily, nothing to hide. My average is at $11. So when we talk about how apes are constantly willing to buy, when we talk about how apes have held a large amount of shares, how we have forced the short sellers to create synthetics, we talk about the amount of power that we actually have on them. And that's exactly why we've said AMC is going to do well. And if you want to look at some historical data, if you want to look at some technical analysis, firstly, what we are seeing is how AMC is doing extremely well in terms of the technicals as well. We are seeing past data that has led to previous massive spikes to happen all over again for AMC, is why people are expecting the big moves. When we talk about the dip levels, when we talk about kind of where we are right now, you can see that the dip level is still 283, 263. So we are seeing and expecting tons of capital to still be flowing in, even if there was a pullback for AMC, even if there was a dip. But not only that, you can see wherever you're someone who's a fan of the Golden Cross, wherever you're a fan of multiple different TA setups, AMC are breaking all of those. AMC are fulfilling exactly what we are seeing for a stock that is going parabolic. But also what we're looking at is how the 3-month MACD, which is the slower technical indicator, and showing how short sellers have lost control from suppressing AMC. Again, so many different indications to why AMC is doing well and why they continue to do well. And that's exactly what we want to see. And many people are now trying to say is that, of course, we are right now looking at a very, very important level going into next week. We're very likely to be looking at some major levels being broken. And if so, that's going to be the MOAS happening. And what we are seeing even right now, if we slow it down, if we don't talk about the parabolic levels, AMC is still doing very well. AMC in a longer term, AMC in a kind of slow yet strong fundamental term, it is still doing very well. We have built a very well foundation, and we're looking at how this is just the beginning of a big reversal. Now, On the other side for GME, we're seeing similar patterns hitting up. We're seeing share availability stacks as price bottom, share available drops, price run up, GME is right before the move. So we are looking at the same thing to happen for GME right now. What's interesting about this is that GME's rating is currently set at 9.2 out of 10, with 2 firms issuing buy ratings on Fidelity. So if you want to look at other indications of how GME is going to do well and how short sellers are going to get burnt again, this is what we're looking at. And then finally, a macro point to look at is how quickly, again, the whole commercial real estate is breaking down and how so many firms are losing money and why the collaterals are collapsing. As always, now this is Financial Advice, and I'll catch you guys next time.